Good day, everyone. So today is our fifth week or the fifth um, day of our class, and our subject is again fundamentals of accountancy, business, and management too. And to get today, we are going to have another lesson. But before that, let me first read to you our objectives. So at the end of this chapter, the students should be able to a. Describe the nature of financial statement analysis. B. Perform horizontal or comparative analysis. C. Do vertical or common size and trend percentage analysis. And B and D. Be familiar with the different tools in analyzing financial statements. So our topic for today is all about the analysis of financial statements. So what are those analyses of financial statements? So the type of information provided by the financial statements focus primarily on the following areas. So we have the financial position, result in financial operation, cash flows, and of course the management stewardship or resources. And we have here the basic objective of financial statement analysis is to assist the different users in the decision-making process. The first is we have here the following procedures that may be adopted in analyzing financial statement. The first one is establish the objective of the financial statement analysis. And then the second one is gather complete information about the firm and study the industry in which the firm operates, perform mathematical analysis using the applicable tools, make conclusions relative to the established objectives. And also, we have here the two phases that may involve. These are namely computation phase and the interpretation phase. So when you say computation phase, this is the first phase and interpretation is the second phase. Sa computation phase, we are going to compute for differences sa percentage and the ratios. And then interpretation is we interpret the results of the figures we get for the first phase. So after the computation, it should have a interpretation after. Okay. So using the statement of financial position and the income statement, financial statements can be analyzed using the following techniques. So these are considered the tools in analyzing and financial data provided by the financial statements. So first we have the horizontal analysis. So horizontal analysis compares the same account in the financial statements of two periods. So those two periods are what we call the current and the past year. So determining the amount of changes and computing its percentage change using base year as comparison. And then the second is the vertical analysis. So this shows the relationship of each part to the whole in a single financial statement. And then the third one is we have the trend analysis. So this trend analysis compares not only 2 years but covers 3, 4, or 5 years financial statements. And then the fourth one is we have the financial ratio analysis. So financial ratio analysis describes the significant relationship between presented in the financial statements. So ratios can be expressed either as a rate, percentage, or a proportion. So let's focus first on the horizontal analysis. So horizontal analysis in financial statements. So this is known as comparative analysis. So this helps the management analyze increases and decreases in the balance sheet and income statement accounts. And this is also an analytical tool that evaluates the present performance of an entity compared to last year's. And the analysis reflects the differences in absolute amount and in percentage between two periods only, namely the present year and the previous year. So for example, in the balance sheet, a significant increase in property, plant, and equipment will indicate purchases of land, equipment, machinery, or other plant assets necessary for use in the business. So a significant decrease will reveal the disposal of such assets as management may have deemed necessary. So we have here example. So the following are the steps in performing a horizontal analysis. This is how you are going to perform or to make a horizontal analysis. You are going to prepare comparative financial statements of 2 consecutive years. So here we have example of the company, Fides Merchandising, statement of financial position as of December 31 in millions. So when you say as of, you are going to use the assets and the liabilities. But as what we have discussed last week or last meeting, that it's about year end. So when you say year end, it's different. So now just remember that as when you say as of, you are going to use the assets and the liabilities. Because at year end, you are going to get the that's the equity or the balance, the capital balance. But on the as of, that's the statement of financial positions as of that month only. Okay, so this is how you are going to make a compare or prepare a comparative financial statements of 2 consecutive years. And the next here, the second step is the first step is that the first step I have told you a while ago is you have to prepare a comparative financial statements of 2 consecutive years. And then the second step is you have to add a third column for the increase or decrease in amount and a fourth column for the percentage of the increase or decrease. So how are we going to do that? So but before that, let us first proceed for our third step. So our third step is you are going to get the percent of increase or decrease for each account. So these are the steps on how you are going to get the percent of the increase or the decrease for each account. So first, you have to choose a base year, which is usually the initial year of analysis. Then second, you have to deduct the amount of the current year from the base year, and you have to divide the difference above by the amount of the base year. So we have here a presented formula. Fourth is you have to multiply the quotient by 100 to get the percentage. So we have here the formula. So our formula is percent change is equal to current year amount minus base year amount over the base year amount times 100%. So here is our solution. So our current year amount is 725.8. It's just interchange on the slide, but our current year amount is 725 pesos and 8 centavos, and our base year amount is 665 and pesos and 4 centavos over our base year is 665.4 pesos times 100%. So that's equivalent to 9.1%. So let's try if our answer is correct. That's 725.8 minus 665 pesos and 4 centavos. That's equivalent to 60 pesos and 4 centavos. And then we are going to divide that one by 665.4. And then you are going to multiply it by 100. So our answer there is 9.07 or that's 9.1%. So that is our percent change in current assets. So that is how you are going to solve for it. So you have to note that for accounts with zero balance in the early year or initial year, the formula for the percentage of change will not apply kung zero balance yung initial year or earlier year niya. Okay. Next example here. No, this is a continuation. So we have already the increase amount and the decrease percent. Okay. So next here, this shows the income statement for the year ended December 31 in millions with the increase and the decrease already. So next is the interpretation of data. So in interpreting data, it is important to note that the materiality of increases or decreases depends on the size of the company. So a material amount in one company may not be material to another. So in analyzing the significance of a percent change in value, the analysis should not only center on internal factors controlled by management. So hence, internal factors are not the only factors considered in data analysis in interpretation, but external factors as well. So management should be well informed on the latest trends affecting their um, management should be well informed on the latest trends affecting their industry. Okay. So we have here the following simple guidelines that may be observed in the horizontal analysis. The first one is you have to present the current and the previous year's financial statements in comparative format. The second is you have to compute the absolute amount of change or difference. The difference could be either an increase or a decrease. And the third is you have to express the difference in percentage by dividing the amount of change by the base. And then the fourth one, you have the computation of percentage of change will not apply if the base amount is negative or zero. And then the last one is you have to interpret the change of an item by relating it with the change or movement of other related items. So now we are going to proceed with vertical analysis. So vertical analysis in the statement of financial position. So analytical tool that determines the size or proportion of an item in the financial statements in relation to the total, and it is also known as common size analysis. This helps the management analyze the components of the total assets as well as the components of the total liabilities and owner's equity. We have here the following steps in performing vertical analysis. First is you have again to prepare comparative financial statements of 2 consecutive years. So on the table, on the example that we had 2017 and 2016. Then you have to add one addition column on the right side of each year. And then third, for the comparative statement of financial position, express each account as a percentage of the total assets. So the total assets is automatically 100%. So likewise, total liabilities and owner's equity is automatically 100% also. The example formula. So 0% of current assets is equal to the 725.8. That's our current. And then over the 2,592.2. So that's the 2,592 pesos and 2 centavos. That is the total assets. Again, the formula for the percent of current assets is equal to, again, I am going to say it, total current assets over the total assets, or shall we say that is 725 is our base current year amount. So current year amount over the total assets times 100%. So that's equivalent to 28%. And then for the percent of non-current liabilities, that's equal to 1,882.4 over 2,592 pesos and 2 centavos times 100. So where did we get that 1,882 pesos and 4 centavos? So that is from non-current liabilities. So that is from our total non-current. So total non-current over the total liabilities and owner's equity times 100 to get the percentage of our non-current liabilities. That's just how you are going to solve. Next. So for the comparative income statement, you have to express each account as percentage of net sales. So net sales, of course, is automatically 100%. So here, the percent of cost of goods sold is 1,032 pesos and 1 centavos over 2,213 pesos and 3 centavos times 100. So the percentage is 46.6%. So where did we get that 1,032 pesos and 10 centavos or 1 centavo? So we get that one on the given also. That's our, okay, that's our cost of goods sold over the cost of goods sold also. Okay. So, the net sale is 2,213 and then the 1,000 here, this one above is our cost of goods sold and there's one below is our net net sales. Okay, so you're going to multiply it by 100 for us to get the percentage, which is 46.6%. Next. Here. So we have already shown you that 2017, and this is the percent equivalent here. The same with 2016, and this is the percentage equivalent. Okay, so you have to notice that for assets, each asset type is expressed as a percentage of the total assets, while the liabilities and the owner's equity are expressed as a percentage of the total liabilities of owner's equity. Next, here. So this one, the same also. You have also noticed that each component of the income statement is expressed as a percentage of net sales. Okay. Now, next, you're going to proceed with the trends analysis or trend analysis. So, trend analysis, a base tier is established who is labeled as the 100%, thereby expressing figures of all other years as a percentage of the base year. So, the amount under each year is divided by the amount in base year, thereby determining the amount of the other years in relation to the base year. So, we have steps in performing a trend analysis. First step is you have again to prepare comparative financial statements for 3, 4, or 5 consecutive years. So this one here is may additional na siya. So we can say we can use 3 consecutive years only. So based on our example, we had 2017 and 2016, and sa trend analysis is kailangan siya 3 or more, 3, 4, or 5 consecutive years. So we have to add another year. So let's start with 2015, then 16 and 17. Second is you have to choose a base year. So usually the first year is the base year. So you are going to calculate the trend percentage for each item by dividing the amount of each item by the base year. So the base year is automatically 1% also. So here is the trend percent formula. So you have to choose the chosen year over the base year times 100%. So for example, the current assets trend percent of 2016. So the chosen year is 2016. So yung current assets sa 2016 is 665 and pesos and 40 centavos. And then yung base year niya is 597 pesos and 60 centavos. Just multiply it by 100. So you are going to get the current assets of the percentage of 2016. Here. So we have now the 3 consecutive years. And this one. And this. Okay, so we have here the percent already. That's converted already or solved into percentage already. So that ends our lesson for today. So I already uploaded an activity on your LMS, and just please answer that one. And thank you for today and have a great day. Thank you. Goodbye.